Hi, everybody, and welcome to a new episode of CFO STACK. Today, as always, we have Jason. Jason, how you doing?
Doing great. Looking forward to it.
And we have as a guest Chris Ortega. Chris, thank you very much for joining us. It's a pleasure to have you on the pod.
Yeah, Alex, you're my guy, man. Jason, I'm looking forward to this conversation.
Awesome. So, Chris, you're the founder and CEO of Fresh FP&A, working in many years in finance as a CFO previously, now as a fractional CFO. But we would love to learn a little bit more.
Yeah, so after spending about 2 decades in accounting, finance, and financial leadership, primarily in high growth businesses, most recently professionally, I was at an international marketing platform company, helped build that up to scale, to sold it off to SAP, which was one of the largest acquisitions I was ever a part of. And that's been most of my professional background coming in, build, shape, scale, exit finance organizations. So after that last exit, I realized two things. The first one is I know what it takes to transform and scale finance organizations. I've been there, done that, know the good, the bad, the ugly, and everything in between. The second thing is I felt like there needed to be a fresh perspective brought to finance. So a little under 2 years ago, I started Fresh FP&A. And basically what we do is we provide fractional CFO and advisory services to those high growth businesses. We help them transform and scale their finance organization. And I'm based in Indiana. And yeah, building Fresh FP&A has been a dream of mine. My initials, to everybody, a unique fact about myself, my initials are CEO, and finally being able to live that out.
I love it. I love it.
Chris, thank you very much for sharing it. It will be great to have some context about how you see now the market environment. This is of course budgeting season. I know how your thoughts are on it.
Yeah, I mean, we were talking about this a little bit behind the scenes, right? I think right now, at least for a lot of our clients, they're in high growth businesses, so they're still focusing on growth. They're still focused on bringing in the right resources. I think the three themes that we see, people, technology, and then also like penetration in other markets and continue to build their branding. I think those are the kind of three themes that we're seeing across our portfolio of clients that we work with is how to make sure they have the right people in the right seat, leveraging the best in class technology, and also driving performance, right? Driving performance in their marketing channels, driving performance in their sales channels, and delivering a great customer experience. So I still think, we're still in I'm like in that middle between being like pessimistic and optimistic. I'm kind of like at that neutral phase right now. My bet is to see how the rest of the year goes, and then walking into Q1, how people are performing, how actual performance is compared to what that budget is. Typically, we always with our clients have at least either a mid-year or after a Q1 reforecast of the business. That way, we anchor some of the expectations and realities based on what we look at for that end year. So those are kind of the three things I'm seeing. And it's still a focus on growth for a lot of different business, but it's profitable growth.
Jason, what are your thoughts on that? You as well working with many firms right now.
Yeah, probably a bit more pessimistic than Chris, but landing in the average neutral area. I've seen some headcount growth. A lot of those were potentially to climb back from rifts that maybe cut a bit too deep, and they're looking to correct some of those things. Not as much on the technology investment side, but definitely the point that Chris made around consolidating around market channels and really understanding how they're getting a return on that ad spend has been a very common theme across three of my clients as well.
So not in terms of investment in technology for looking at 2024.
No, not quite as much. I haven't seen as much of that, and especially on the accounting and finance side, I haven't heard as much about it, especially as fractional. I've heard a number of folks actually pull back some budgets from this year they hadn't used, and they're not even rolling it over into next year. Um, Unfortunately, right, like part of my advice is really right. We're in a different market than we were 3 or 4 years ago. To grab an accounting or finance hire and to get someone of talent is, 2, 3x more expensive than it was not even 3 years ago. And You really have to find that balance between the technology as a force multiplier for your best folks and hiring. But unfortunately, as we've seen, there's been a pretty massive CPA shortage. There's a shortage out there from a finance hire perspective. So I feel like next year could be a tough year in that the right investments weren't made that take a bit longer to manifest, like tech, and hiring, even if they want to, may be a lot slower, and they may be a bit behind because of that.
That's great. You mentioned, Chris, profitable growth, right? That's definitely something that in the last years or almost already we've been listening a lot.
Yeah, I think we've come from an area where, grow at all costs, right? Like, I think of SaaS companies rule of 40, right? You had some companies that were growing 200% and losing like 150%. They still rule of 40, right? But I think what you're starting to see are three different things. Like, pretty, like, 20 to, 15 to 25% revenue growth. You definitely have to have that 10 to 15 EBIT margin. But here's the real kicker, right? Companies that are growing at that 15 to 25% top line have that EBITDA drop through of like 10 to 15%, but also are cash flow positive. That I think is like the holy grail of what you need around profitable growth. You're growing at a pretty decent rate. You're dropping through net income, but you're also self-sustained from a cash perspective, and you at least have like 18 to 24 months of runway of cash on hand. Those organizations that we see that fit that kind of profile, those are the companies that are really in an advantageous position, right? And I think you see that a lot. And this is where technology, right? I think one of the things that I've seen and just overall, like generative AI is like huge right now. When you start looking at the macro market of companies that have AI in their platforms or their solutions that don't, they're getting higher valuations. The market is hot right now for AI. So you're starting to see a lot of technology companies pivot to what I say. Like, remember you used to go to the toy store and it used to say batteries included? Now you're starting to see a lot more tech companies that says generative AI is included, right? Because it gives that kind of valuation bump. It gives you a lot more credibility. It makes investors more likely to invest, and it kind of raises a lot more interest in it. So to me, I think that whole shuffle of what profitable growth means and what that cash element goes along with it as well too is really position a lot of organizations to be very strong as we continue to navigate uncertainty and challenge, right? I mean, the other macro piece of it is like next year's the U.S. economy. We're going through a political year, right? Like it's a that always has a lot of turmoil in the markets and a lot of things going along with that. So walking into 2024, you got the economic landscape, you got the political landscape, you got this generative AI landscape, you got, as Jason mentions, this personnel landscape that's changing. There's a lot of uncertainty and challenge ahead, and I think organizations that are making sure that they're managing growth from a profitability, both profit and cash perspective, those are the ones that are going to be able to navigate the next, I would say, 12 to 18 months.
I would jump in there. Wait, one of the things you mentioned around I like the batteries included example. That was great, and the generative AI being the batteries included. Um, but I think that's absolutely true, and probably in a lot more ways with batteries as well. And that it almost feels commoditized at this point, where yeah, there may be certain alkaline batteries that can last 10% longer, but they're very similar. I think investors love that. On the marketing and the customer side of a lot of these SaaS folks, I feel like that could be in a lot of ways the kiss of death, right? Like seen a lot of customers talk about, well, that's great, but like, how is AI actually going to help me as a use case? So I think you're spot on that. Like, it's a great multiplier for their valuation for investors. I hope we don't make the mistake of like over marketing to that in 2024 and then realizing that customers, they don't really care because that's not yet a use case that they can really see a value prop line of sight to. Uh, Chris, one of the things you mentioned at the beginning too, I was curious about. You talked about the cycle you had been through and how you came up with Fresh FP&A. Knowing that we focus a lot on data and tech here at the CFO Stack, I'd love to hear, kind of like what's the fresh perspective and what were the learnings there, particularly around like tech stacks and like how you saw that symbiotic relationship with some of your finance teams and transforming them. Since most finance transformation, while there is always a lot of process and people and improvements, a lot of it's centered around tech. So I'd love to hear more about that and where you found the right catalysts maybe even lost leaders, etc.
Yeah, I think the tech stack, like here's the fundamental fallacy I think a lot of CFOs make and just finance leaders make. They think that technology is going to solve all their problems. That is actually, to be fully transparent with you, Jason, that is the last place to start. So typically with a lot of our clients, we start on really the foundation pillars of transformation, right? People, process, and partnership, right? You got to have the right people in the right seat, doing the right level of work, bringing the right level of value to the business partners, right? Once you do those three things, right? Once you have that right person, they're not working on these very manual, low value processes, and you're not just the scorekeeper inside the organization, you're actually the valued advisor. Now you get into more of those scaling pillars, which for us is going to be platform, performance, and profit optimization. Now, once you have that foundation set, think of the finance organization as a house, right? And if you don't have that foundation of that house, it doesn't matter what you build on top of it. It doesn't matter if you have the big screen TVs and the movie theaters and the whatever the movie theater in your basement. None of that matters if the foundation isn't set. So before we even get down the technology aspect of it, that's where we kind of focus on first, building the great foundation inside the organization. Then once you get to that, then it's looking about not only thinking about the technologies that solve your problems today, but as we deal with a lot of high growth businesses, it's like you got to be thinking about what those next set of problems are going to be 5, 10 years, 15 years now. A lot of organizations make the fundamental mistake of getting technologies that only solve their pain and where they're currently at in their business, and then they quickly outgrow it, right? You get to, you grow another scale, maybe you raise an equity round or you expand internationally or you go conquer another vertical or you maybe make some acquisitions and you quickly realize you've outgrown that platform. So for us, it's not only thinking about the pains and frustrations that you have in the short term, but also thinking about the long term as well too, because that's the last place. This is the thing with technology, and I've implemented countless ERP, FP&A, AR, AP tools, you name it, across the organization. I've either worked with it or implemented it. You got to be thinking about the future, right? And like how your business won't outgrow that technology because software implementation and new software adoption is a painful process. I don't care what technology software company tells you, implementation of a new technology is a painful process. Change is always painful. So that's typically the strategy, the tactics, and the vision that we kind of set with our clients and our customers as we work through that technology adoption.
Yeah, I would say you might have to find some new technology partners. Kidding, but truthfully, I think change doesn't necessarily have to be painful, in my opinion, but definitely it should be uncomfortable at the very least. So I'll meet you in the middle on that one. One devil's advocate thing I'd ask is kind of a follow up is, I think those pillars make sense, particularly as an engagement with a fractional group to really get the people in the process and that finance business partnership stood up. What would you say if, when you really think about that critical thinking and you want to pull forward, hey, ultimately I'm trying to solve XYZ problem and I have a number of resources. And if you're not looking at technology as part of that initial phase of potential resources, how do you mitigate the risk of maybe like over hiring or maybe even recommending a certain staffing model that doesn't need to, be as robust from an accounting transaction processing perspective when you look at phase two and some of the technology investments?
Yeah, I mean, here's the thing. Tactical operations is poised for technology adoption, right? Like you think about the AR AP process, right? I can't name name all the tools on one hand that are in that space that can help you automate a lot of tactical operations, right? So, particularly if you're looking at the accounting function as a place to start with technology adoption, 1000%. Like you don't, here's the thing that doesn't scale anymore. Throwing people to solve problems that technology can doesn't scale anymore, right? So, accounting is 1000% poised for that. Like, if any client is saying, hey, we should hire a bookkeeper, no, no, no. Like, that's like probably not one of the positions you need to hire because if a technology gives you 80% of that value, you don't need a person to be doing that level of work, right? So, definitely in tactical operations, that's where you can poise a lot of automation to kind of help you. But when you get into more of the strategic level, the FP&A tools, the business intelligence platforms, right? Like you definitely want to make sure you have processes because at the end of the day, like not you get a best in class Power BI or Tableau or whatever you name the business intelligence platform, right? if you don't have the right people, the right processes, and delivering the right value, that's another like data visualization tool, right? You're not really harnessing the power of that. So I think that technology, when it's tactical focus, yes. But once you start moving up that value of that strategic level of value, and you've got that seat at the table, that's where you need to be more conscious about the technology you're bringing on.
Love it. Well, I know we have 3 minutes, so I'll hit you with another quick one. I think specifically you mentioned number of FP&As, all kinds of AP and AR automation. Let's just do a quick round. Recommended ERP, recommended AP/AR automation, ledger, all of the above. Let's go down some of the categories and let's just get your hot take on some of them.
Cool. Yeah, let's.
All right, so we'll go first with ERP and ledger.
Man, this is a hard one. It depends on the business. I don't know if I could give like if you're a middle-sized business, high-growth business, probably NetSuite, that's the preferred, right? If you're a startup, quickly getting out the books, everybody goes with QuickBooks Online. You'll outgrow that, you'll move over to a more sophisticated. So, there's a lot of great solutions out there. But quick start, if you want to start QuickBooks, if you're a startup, if you're scaling up, definitely switch over to NetSuite.
Love it. What about some of the APAR solutions that you mentioned earlier?
Yeah. So obviously on the AP side, there's a great company that I actually did a podcast with. They're called Glen AI. They're basically Bill.com with AI included. I would highly recommend checking them out. They help automate a lot of different reconciliations, give you insights. They actually couple the AI piece of it to with one of those tactical details. So I would highly recommend checking them out. They're a great provider. And then you also got the Bills.com, you got the Rebus, you got all those other players in there. I think the most important thing that I want people to take away is thinking about the technology that fits your business, right? Don't go look at the shiny Lamborghini technology, right? Because what's the purpose of having a Lamborghini when you got it running in a school zone? It's not going to possibly work. So that's a great company to go check out. Howard is there. He's a former CFO who's turned CEO, kind of similar to my background. Highly recommend checking them out.
Love it. And then last but not least, FP&A.
Man, this one, I get new FP&A software companies that reach out to me like literally every week. I this one is a hard one, man. I
All
would
right, all
not be able
right,
to
all right.
name.
Fair. We won't name them because I'm with you. It's too entrenched at this point with new oncomers.
Yeah,
So we'll go with a
it's
different follow up then.
saturated. It's saturated. I think
Saturated is the best word.
there's a company that fits every use case out there. So find the one that finds your pain and that you have a great that you can scale with and gives you what you need not only in short term but the long term. That'd be my best recommendation on the FP&A side.
Love it. Yeah, and I think the one I'm looking for is the one that doesn't rely on aggregated ledger detail. That is the most common problem I hear with FP&A tools is you got everything piped in, and then it's like, well, I can't get any more detail this in my ledger, and that's an FP&A analyst's nightmare, frankly.
Facts.
Awesome, Chris. Glad to have you on. Thanks for spending time with us, man.
Yeah, for sure. And everybody watching, if you want to connect with me, I'm all over LinkedIn. So just type in Fresh CFO. I'm happy to have any questions, comments. I'm always heavily engaged on LinkedIn. If you want to know more about Fresh FP&A, check us out at www.freshfpa.com. And then it's Fresh FPA on all of our socials. Make sure to follow us and connect with us. And thank you guys both for your time. Really appreciate this conversation.
Thanks, Chris. Take care, man.